Our gross NPA is 1.7% as on 31st March 2018. Why? Because one is that we have been concentrating on developing qualitative business. As a part of that, we have been focusing on broad-based lending. We have been adopting lending approach to certain sectors where we have good knowledge and experience of those borrowers from that sector. For that, actually we have adopted a cluster approach also, and owing to that cluster approach, we were so comfortable in that cluster that there were hardly NPAs in that particular cluster. We have one printing industry special cluster policy, one is agro-based manufacturing products cluster-based policy. Cluster-based approach, broad-based lending, avoiding concentration risk, avoiding risky sectors and businesses, avoiding greenfield projects, avoiding real estate sector exposure, and concentrating on quality and risk mitigation. Those were the steps which our bank has taken. Our treasury is very effective. We are having all the systems and tools to analyze the market, take steps right time. Entry and exit is very important when we are dealing in the GSEC market, bond market, etc. See, if you remember, when the rate hike cycle started, that time we had taken certain strategic calls. We entered when government security yields, especially state loans, reached around 9%. That time we entered into market and bought securities worth rupees 200 crores in one go. Likewise, when the yield started coming down, we exited, booked the profits. Second churning we did, low yield securities where coupon was low, even at a loss, we exited those securities and entered into a high coupon yield securities so that my average yield on the government securities improves. Third, we were continuously monitoring duration. What is my modified duration of my holding? We were trying to reduce the duration over a period of time. It is a multi-pronged strategy to protect from MTM losses by cultivating duration, by protecting coupon, mix up the securities like state loans and central government securities and mutual funds, getting exit at the right time, enter at the right time. So we just cannot sit on the portfolio. We have to continuously churn it. See, it is continuous. We have been continuously evolving various strategies to connect with our customer. As a part of that, out of the 2 board meetings which we are having every month, 1 board meeting we are having outside head office, that is at any branch location. So what happens, entire board of directors go to that branch because my board meeting is there only, and post board meeting we have a customer meet. Customer meet with entire board of directors. So there is a direct connect with the customer, and whatever feedback is received from the field level, that is from customers directly, then those things are deliberated within the executives, and then we devise, change, rewind our policies, product to make it more customer friendly. Likewise, we try to connect with our staff also, who is basically bringing business for the bank. So based on their own experience, we continuously interact and see that what actually my force team, they need to increase the business. And accordingly, we try to feed them by changing the type of product, pricing, charges and flexibility. So those things are being continuously evaluated. We have 56 branches. Out of 56, only 2 are outside Gujarat and both are in Mumbai. Over the years, we gained the experience that instead of going for totally new branch structure and seeing that break-even of a new branch normally comes after 2 years or 3 years in certain cases also. Instead of that, instead of going for brick and mortar style, we'll go for digital marketing. Focus will be that. Second, we will be very open, frank and eager for merger and acquisitions. So if a bank already having brick and mortar structure running in a medium level, we are ready to acquire that and then give our leverages to the clientele of that bank and develop that center. So that is our strategy.